Welcome back, investors, to Ticker Time News. I'm Adam, and we're going to talk about today the chip stocks. They are not doing so good in the after hours. I mean, they've been great performers, but in the after hours, I think they're getting crushed, and they may be actually crushed tomorrow during the regular cash session. What ignited it? Well, Intel. Intel is the chart you see on your screen here. Now, the aftermarket is already closed. It closed just a minute ago. At 8 p.m. Eastern, it shuts down. And on my off-screen computer here, Intel closed at $30.09. You can see it on the bottom right corner of your screen, $30.09, up 1.3% on the day. But in the after hours, it dropped and it fell hard. It is now down to $27.16. Yeah, it fell. It actually got to a low in the after hours of 27.07. So if you want to look and see where's Intel currently sitting at on the chart, well, this is where Intel is going to open tomorrow, all the way down here, right there. Yeah, they closed up here, and this is how far they have fallen in the after hours. And it's like that for AMD, NVDA, the semiconductor ETF. They are all down in the after hours, mainly because of what happened to Intel. It was a horrible report. Now, Intel did try to make it look good, but you can only do so good with your words when you look at the numbers and they're so horrible. So we're going to talk about Intel. We're also going to talk about IBM because they weighed down on the Dow's performance today. Look, the S&P 500, the SPY was up 1.1%. The Qs were up nearly 2%, but the Dow was only able to gain just over 0.5% today. And then you've got your small caps just over 0.5%, and your MDY, your mid caps, up about 0.8%. So interesting move there. But I do believe technology hit its ceiling today with a big burst of energy, but Intel deflated that, IBM deflated that balloon. So we're going to talk about both of those companies and their earnings. And then I want to talk about a winner. I want to talk about Tractor Supply. I bring it up every once in a while. It's one of my favorites. And their earnings report came out, and they are just plowing the competition away. They are really, really, really good at what they do. And they're just nailing it. So I want to talk about those three companies and their earnings. But remember, the most important thing is you. What's on your mind? If you have a question, leave it in the live chat. We will talk about it on this show live. So if I don't know, I will be clear and upfront with you and say, I haven't got a clue, but we can look it up and see if we can't find an answer. So I'm glad to see that you guys are here with me. Let's have a great hour, hour and a half, however long it goes. Your questions lead the way. Okay. Intel, the first. Looking here at what you guys have to say to get us started. Until this 4-hour sideways on Dixie, which is the dollar, DXY, is completed, everything is hard to trade. You have a very fair point, a good point. The dollar has been moving sideways to down ever since it broke two very important support structures. One was the inclining trend line that held the dollar up over the past year about, and the 102.5 level. Once those two broke, the dollar, I think, is done for a while. And it has been. We can see here on the chart that the dollar has not been doing very much at all. If we open this up a little bit higher here so we can see it, you can see that upwards angled trend line. And then you can see the horizontal line there. And what's the dollar been doing? Since it broke the trend line, and it did it all in one day. It broke the trend line, and it broke that critical 102.5 level all on the same day. It was spectacular if you wanted to see the dollar go down. And then it's been moving sideways to slightly down. Now, there was a little bit of positive movement in the dollar today, but hey, like I've said before, since breaking the trend line and the support line, I think that negative or inverse correlation the dollar has had with the SPY, I think that has broken for now. And I don't know when that inverse correlation is going to come back. Because remember, for just about a year of most of 2022, especially from Q2 all the way to Q4 of 2022, when the dollar went up, the SPY went down. When the dollar went down, the SPY went up. And the more aggressive the move was in the dollar, the more aggressive the move was in the SPY. So until that does resolve itself, either bring itself back up or just completely flushes it down even further, yeah, you're right. It is hard to trade this market. Now, I'm going to show you a couple things. Remember during yesterday's live stream, we talked about the Qs and defensive sectors versus the old FANG sectors, right? The old FANG stocks, I should say. And I showed you how defensive names were doing pretty bad on a relative strength basis. They were all RSI 40 and below. But on the old FANG stocks, their RSIs were 70 and above, meaning they were already overbought yesterday. You add in today, and most of them have just gotten to the extreme point of being overbought. So I think that's one reason why the Qs for sure are down pretty significantly here in the after hours, about $2 or so. And I think it'll continue tomorrow. But when you look at the chart for today, you think, oh my goodness, it actually broke that chop box that we talked about during yesterday's live stream. And it looks like it's just unstoppable. But keep it in perspective. Okay, let's keep moving on here. You guys are already lighting up the comments. I love it. Apple gave a buy signal later in the day. Apple is sidestepping some of the problems that we are seeing in the tech space. A lot of companies, Meta, for example, had a big pullback, a big drop. It got below its 2019 high. Apple, on the other hand, has not. It's not even close. So Apple overall, especially on a relative strength basis, has been holding up pretty well. I mean, it was pretty aggressive today, but now if I'm going to put this trend line up there, I want to look at the RSI. The RSI is at a 73. 70 and above is overbought, and it's starting to get into this shaded red area up here just overhead. So if I put a trend line up here, just going back not very far, October, and catch those highs right here, watch where this trend line goes. When I catch the highs, the recent trend line for the recent highs, Apple actually broke above that today. Today, Apple broke above that more shorter term trend line. And the longer term trend line that started back in 2021, Apple broke above that last Monday, Monday the 23rd. So Apple has had a great week of busting through trend lines. It's also today, it broke through and closed above its upper end of the weekly expected move, which was at 141. So both of these look pretty bullish for Apple. But one thing that I definitely want to point out here is the 5-period moving average. Apple was connected to it yesterday. Today, it disconnected from its 5-day EMA. Now, I think of the 5-day EMA as like a circuit. It needs to be connected for that circuit to flow through. Think of a light switch in your light overhead. When the light switch is on, the electricity flows through. when the 5-day EMA is connected to the candle, whether it's the wick or the body, the entire candlestick, then that circuit is complete and that electricity can flow right through. But as soon as you get disconnected, that means you've had a big move. It can be to the upside or downside. It doesn't matter which way. And it can help you avoid getting into FOMO situations. If it has really been disconnected from that 5-day EMA, you know to kind of stay away. Wait a moment. Let it cool off a bit. Reconnect. Okay? Or catch it on the flip side. Okay? Also, with that 5-day EMA, it's usually 2 or 3 days is the average that it is. That candlesticks are disconnected from that 5-day EMA. It can help save you a lot, especially buying at the extremes, buying too high or too low, whichever you are looking at, depending on whether you're long or short on the underlying equity. So it is disconnected from that. Okay, wonderful. I want to keep on this topic here about tech, especially with Intel bringing the semis down this afternoon. Lucid maintained itself, LCID for Lucid Motors. Oh, it's been a minute. It's been a minute since I've looked at Lucid. Oh, and remember, Apple has earnings next week. Not far off. Not far off indeed. Looking here, what are they? Up 1.4% today. They outperformed the SPY here, which is good. They got above some resistance that had held them back for the past couple of sessions. If this keeps going, the next place that I would probably be looking at is this group of candles right in here. Oh, my highlighter didn't want to stay with me. All right, let's go highlighter. Yeah, this group of candles right here. This would be the next place that I'd want to watch out for. And what's the high of this place? $10.10. So $1.10 above where it closed at today at $9. That would be the next overhead resistance for Lucid if it can maintain its course here. And it has been doing pretty good. But remember, try to box things in. Oh, come on now. That's not what I wanted. Remember, try to box things in and look at them relative to how they're performing in 2023. It can help you out. All right, let's see where this line takes us. Yeah, and Lucid has, it's kind of broken away from that a little bit. I could potentially move it up and saying that, well, that was just a gap through on those 2 days. That's a possibility. Change that to support. All right, if Lucid could hold that trend, that would be wonderful. It is connected to its 5-day EMA. That's another bonus that we have there as well. NIO has stalled. NIO. Remember, NIO was caught up with the NYSE glitch earlier this week. Pretty crazy action that happened. And that's why it's got this big old ugly weird candle sticking up. That was all a glitch first thing in the morning. All right, 4.6% today. It's getting ready to run into some overhead resistance. I would say that would be starting at about 12.6. So watch out for that. It did slightly disconnect from its 5-period EMA today, so do pay attention to that as well. It's got a, we could probably line this up. Let's see how this does line up here. If we put the trend line there, it's gotten a bit a ways from that trend line that it was creating there over the past couple of weeks. So it might pull back or move sideways to get closer to it. The overhead resistance could force it sideways to kind of reconnect with that trend line. That's a possibility. Absolutely. Bitcoin, 200 moving average on the weekly is making it go sideways with the Dixie. I don't typically pull up Bitcoin too often during the live stream, but I'm definitely happy to. Oh man, look at that. All right, let's put the weekly up here. 1 week on the chart, and even on the daily, the past several days, it has been moving sideways to slightly up. Wow, look at that on the weekly. All right, let's pull this back down. Yeah, it looks like it wants to come in contact with that 200-day moving average and its 50-day moving average. Now, if, for example, if Bitcoin either continues to just maintain and move sideways or even creep higher a little bit, then that's going to cause the 200-day to flatten out, and that's going to bring the 50-day down just a little bit and then maybe start to flatten out. And if the 200-day does continue moving up and the 50-day happens to come below it, you know what you have there? The opposite of a death cross, you have a golden cross, which is just a lagging indicator to say, hey, this is bullish for Bitcoin. So that golden cross is looking to set up for Bitcoin here. It would be interesting if that did happen. But again, it is a lagging indicator. So there you go. There you have it. It would be, this is the real test for Bitcoin. It hasn't quite gotten there yet, but right here at 24, let's call it 24,400. You've got these two candles right here. I think that's a test. And then if you look at where the 200-day is at 24,700 right now, as Bitcoin maybe moves sideways, maybe a little bit up, you know, that will start to flatten out the 200-day, especially if it just moves sideways, and it'll bring that 50-day a little further down. It started to curve to get to the flat out part, but it's nowhere near it yet. So that price point, 24,400, that on a weekly time frame, if we close above 24.4 on a weekly candle, that would, I think that would be very bullish for Bitcoin, because that's a significant top in a shorter term period. When is this? This was August. August, yeah, a real short term period there. But you get my point, right? That would be significant. And then I think, of course, if it broke that and the 200-day kind of flattens out a little bit more, and breaking the 200-day, those would be two very significant pushes for Bitcoin, at least to get it into a bullish structure. So absolutely. Bring on the chip stocks. That's exactly what I want to do. I do want to talk about the chips. What have you missed? Not a whole lot so far, quite frankly. Just been going through some of the questions that were brought up first thing. Just kind of getting them out of the way here, because I want to talk about Intel bringing down the semis. I want to talk about IBM weighing down the Dow. And then I want to talk about that winner, Tractor Supply, one of my favorites. I think it's a great name, and it's got a lot of good potential. So haven't missed much yet. Crude oil futures didn't move at all today. I did not look, except for this morning, to see what oil was doing at the close. How did it finish the day? Rather flat. Yeah, you're right. There is this, I think this is positive, okay? Let me put this trend line across the top right about here, okay? Oil breaking above that multi-week resistance right there, I think is a bit on the bullish side. Now, it's got that 20-day moving average that kind of held it down. I wonder if it could push above that. If you're bullish on oil, then breaking that 20-day, that would be a positive sign. But right now, it looks like it wants to be in a bit of a chop box right here. And that goes back to the left of the screen. It's just a little bit higher where we had a prior area of choppiness for oil that it could bounce around in. Excellent. Awesome. Glad you're here. Tesla, not ready either. Tesla, look, Tesla did good. It had a good earnings report. I read through the transcript yesterday evening after the live stream. Good earnings call. Elon Musk was bullish. He was hyped. That was good for Tesla, TSLA. And they had a wonderful day today. As a matter of fact, I think Tesla helped, maybe along with Chevron, I think helped to move this market higher. Breaking out of the chop box, especially in the technology sector, even on the SPY, and getting it closer to upper levels, very close to setting a new higher high. And I'm going to talk about that when I get to the market segment of this. But the SPY and the Qs, they are really close to setting a higher high from the December 13th high. Haven't broke that December 13th high yet, but they are close. Now, the IWM today did break that December 13th high. So the IWM, which is your small caps, has made a higher high. That's important. And there's a lower high. Those are things that you want to see if you think the market is going to be bullish. Me personally, I think the market's moving sideways. That's where I think it is right now. And we still need more data from earnings to give us a direction for where this market wants to go. Okay. So Tesla, a beautiful day. Let me move this out of the way. That's not relevant anymore. I would like to see Tesla. This is the weekly time frame. I forgot I was there for Bitcoin. Let's get to the daily time frame. Yeah, Tesla broke out nice. I think the next area of concern, let's see, where is this level at? It's at about, let's call it 170. 170. If we go back here, you can see that it added as, all right, highlighter right there, support 170, right there, support 170 before breaking down. Now could, 170 then become resistance? Old support becomes new resistance. Could that happen? I think it's very possible, because when you look at the RSI, Tesla is 70.4, just right on the border of being overbought. Now, big earnings, up 11% today. Really, really nice. So does it have more steam in the tank? I think there's another $10 that could potentially be put on the stock, but do be careful. If you look a little bit closer at the type of candle that was made today, let me bring this up. Open it up a little bit more so you can see it. It's really hard to see because it's such a small body on the actual candle today. But it's also it's making a bit of a doji candle. Let me say that right, which has a very flat body. Now, if I'm going to pull this up and show you on the candlestick chart pattern, if you look right in the middle of this, let's make sure I got my drawing tools here. If you look right in the middle, okay, right here, this is the two type of doji candles, okay. Typically one is has equal parts body and or I should say wick. You got a very thin body, a wick on top, a wick on the bottom. They're about equal in size. A doji candle is pretty neutral. You can see it right there on the chart there. So that's what we're looking at for what Tesla made today as far as a candle, even though I'd like to see the wick up a little bit higher on the top side than what it currently is, but it fits the description of a doji candle, which is neutral, meaning Tesla could move higher. Tesla could move lower tomorrow. Let's see if it does move lower, can it hold some key areas of support like its 50-day moving average, which right now is sitting at 151.53, okay? 151.53. If it could hold that as support, that would be wonderful. Now, Tesla is outside of its weekly expected move. That's important. Weekly expected move for Tesla is at 146. It's way above it. So we're not just looking at a 1 sigma move for Tesla. We're looking at a 2 sigma move for Tesla, which if we go back to where things were last Friday, this is where Tesla closed last Friday. And that's when you have the weekly expected move, it's an equation and you get a number from that equation. And that number is plus or minus for what the options market expects with implied volatility and other information to say, hey, this is where we're putting our money on where Tesla is going to be in the week ahead. So Tesla right now is making a 2 sigma move. And if you know the bell curve, right, a 1 sigma move catches about 68% of the moves. If you're looking at a 2 sigma move, then it's catching about 98% of all moves that could be made in the market. So Tesla is up there, and I'm not sure that it could go that extra maybe 10 before it gets to some sort of resistance. But we could potentially look at this particular candle right there. All right. That candle does line up with where Tesla ended today. And that candle was rejected before pulling down even further. Tried to ride it higher, it got rejected. That could be a level, this 160, where you know what, that it's just Tesla had a great run, a great move after earnings. Maybe we're going to have some profit taking tomorrow. Tomorrow is Friday. It's the last day of the week. It's the last full week of January. Next week, January ends and February begins. So we got to get all of our, I should have pulled it up for tomorrow. I'll pull it up tomorrow to show you the options expirations and what we have for tomorrow. Or maybe I'll try to pull that up at the end of the show because it's important to know, because it can add some context to, you know, what could potentially happen tomorrow. Let's see here. What else do we have? I want to get on to Intel and the semis. I really, really do. Let's see. If I've learned anything in my 23 years of trading, it's that the only thing that truly matters is price action. That is true. Price action is very important. If price continues to, the perfect example is how the market closed today, right? I was trading this today. Let me go over here to the SPX, and I'm going to go down to the 1 minute chart. And I want to show you this because this is what I was trading this afternoon. Let's go all the way down. Oh, all the way up top here to the 1 minute time frame. on the SPX. Now, I was using the ticker SPXL to go long. Now, if you look, I know it's a minute by minute, so candles can be, they can look bigger than they really are when you're getting down to this tiny of a timeline. Oh, come on. Okay, now let's go. Let's go. And then I'm going to talk about Intel. Let me just show this real quick, and then I'll get to Intel and the semis, because I know that's what a lot of you want to hear. I think we could be seeing the top of the semis because of Intel. Okay. All right. So I still even have my trend lines drawn from when I was trading this afternoon. Okay. If you look at today, it's kind of hard to get it all in here on the 1 minute time frame. Let me bring it back down just a little bit. I went a little too far. So this afternoon, here we go. I'm just going to look at this afternoon. This afternoon, we were riding this trend right here, okay? And then it broke out. It broke out. But what was interesting is we were constantly making higher highs and we were making higher lows all afternoon. That's strength through price action. That shows the market wants to push it higher. And the lows, let's keep those up too on any pullback. So we were in this pretty significant channel here where when it pulled down, you could ride it, take the long, ride it to the top, jump out, right? And take your profit there with you. You could go to SPXS and ride the thing down and then jump out and take your profit, and then go back over to SPXL and ride it up and take your profit. This is what I was doing this afternoon. I wasn't playing the short side. I was only doing the long side here. And then right at the close, look what happens. This thing just goes from down here at the 40.50, which is a very sticky area. 39.50 is also very sticky. It's almost like every 50 points on the S&P 500, it gets really sticky and price kind of hangs up there. But once it broke loose, it just ran into the close, getting all the way up. It was setting new high, new high, new high, new high, new high for the day, all the way to the close. The last 60 seconds of the day, it pulled back just slightly, just ever so slightly. But that was an amazing ride right there. And I jumped out a couple minutes before the end, so I didn't catch all of this run here into the close. But it was fun. Price action said it wanted to go higher. And knowing that can help you out tremendously. Now, if a breakdown occurred, like I was concerned about, let me get the highlighter. I was concerned about this breakdown right here. It broke the trend line that it had been holding all afternoon. And that breakdown there, I was like, okay, this could be it. Maybe the ride is over and we're just going to go back down to the weekly expected move. Because if you notice, that purple line is right here on the screen, right here. That's the upper end of the weekly expected move for the S&P 500, 40.45. So with it up here at 40.60 at the close, it wouldn't surprise me at all tomorrow for us to pull back to or within 40.45. Why? Because it's the weekly expected move. And 68% of the time, that's where price action ends the week, within the weekly expected move. So we do the weekly expected move on about 40 products. We send it out every Sunday evening to our investor community. And I'm pulling it up here just a little bit tighter to show you where the lower end is of the weekly expected move, and it was all the way down here at 38.99. So we're not going to come close to that bottom, but 68% of the time, the market will finish the week within those two price points. 38.99 all the way up to 40.45. That was this week's expected move for the SPX, the S&P 500. So we'll see if it does do a turnaround, a U-turn, and come back to close within it. That's what typically happens. That's what normally happens when it gets outside on the upside or even on the downside of it. Okay. All right. Let's keep going here. Let's see. What is the worst lagging indicator? CPI. Oh, I'm not kidding. If you're looking for an economic worst lagging indicator, CPI, because all that data, or the majority of that data, is how were things, not how are things. Okay? Big difference between were and are. How were things in the past? How are things now? Or how are things going to be? The CPI report is not forward-looking. And the CPI report is what the Fed uses to gauge where its rates are going, or if tightening is going to continue. Because remember, with these rate hikes, we're also getting the Fed tightening, taking $95 billion out of the market, liquidity out of the market every single month. And it looks like it's not going to stop anytime soon. If you're looking for a chart, what's the worst indicator on the chart, or worst lagging? The golden cross or the death cross. They are way overblown in importance. They're not important to me. They're just funny little names that happen at times when it doesn't really matter, right? Because the trend has already changed and is already moving forward. And that's, again, the death cross is when the 200-day crosses down below the 50-day moving averages. And then the golden cross is when the 200-day crosses through moving up of the 50-day. So you've got your golden cross, which means the market is moving higher, and your death cross means the market's moving lower. So I don't like those two indicators or the CPI report at all, because they are the worst. I got what you were saying there. Worst lagging indicators. Absolutely. Let's see here. Where do we want to go? Oh, I'm glad you got your popcorn. I love it. I love popcorn. I eat popcorn almost every night. It is so good. Absolutely love it. Just a little bit of salt, a little bit of butter. It's wonderful. What do you like on your popcorn? Oh, my goodness. All right. Do you use debit spread option for trading? No, I do not. I keep things as simple as possible. I do more trading on the open market than I do in the options market. The options market, I'll use that for maybe making some simple income for the week or for the month. I like to use options when the trend is strong. I would rather play the market, the open cash market, and used leveraged ETFs or leveraged like the SP. Let me just pull it up here. SP. Let me get the cursor back. SPXL, which is a 3x leveraged ETN. It trades just like an ETF, but it tracks the S&P 500 through the ticker SPX. Now, as this goes up, for example, if the SPX, if that went up 1%, this SPXL, it goes up by 3%. So I love using these on a daily basis. My favorite products are from Direction, and that's spelled DIREXION, Direction. They got a website. You can go check them out. They even have leveraged tickers for Tesla, for Apple, for Amazon. I love their products. Not sponsored. I just love their products, and I use them. I was using this product today as the market wanted to march higher. So every time we got to that bottom of the trend line, that's when I would load up. I would take it up, and we get to a certain point. $72, for example, was one specific point that it kept tagging mid-afternoon. That was my stop right there. Or once we broke that 72, then I would put a trailing stop loss on. So it goes up after it drops, 25 cents, maybe even 10 cents. If I'm getting nervous, keep that stop really, really tight. Then it would stop me out, cash in, take the gain. So I love playing these, especially because they're leveraged. And it's not me really getting into margin and borrowing money. So it's not working that way because it's trading just like an ETF. So I absolutely love Directions products. Absolutely. Okay, let's keep going. The week goes by so fast when you're trading. It really does. And let me add to that, the week goes by really fast when you are punching in those gains. That's when the week supercharges and goes really fast. And whether those gains are coming from an up market or a down market, because those gains can come either way. For example, the flip side of SPXL is SPXS. Let me get the cursor back over here. SPXS. This ETN or ETF, however you want to call it, I mean, it's technically an ETN because it's tracking something very specific. This is where I made a lot of money last year, trading this as the market went down. Really, really easy to use. Okay, all right. Death Cross. Yeah, Death Cross, that is on the way down. Golden Cross is on the way up. Okay, CRM could come back. There's been a lot of talk about CRM and if it comes back or not. Okay, would you explain your PPO indicator settings and why? Sure, I don't have that one on the screen right now. I can add it. All right, let's go. You gonna let me add this or not? Come on. Moving a little slow there, TradingView. For some reason, this week, TradingView has been moving very slow. Let's see. Okay. All right, TradingView might just be moving too slow right now. Okay. All right. How about this? If this would be okay, since TradingView is moving slow right now, Would it be okay if we did it on tomorrow's live stream? That way I can have it pre-set up and already loaded on the chart, and we can go through it then. If that would be okay with you, that would be wonderful. I could start out the live stream talking about that indicator or other indicators that are used, other indicators that I use as well. That would be wonderful. Bitcoin just had a big dump. You know, remember I've talked to you guys about this. I've been tracking Bitcoin's performance. Yeah, look at that. This is on the 1 minute time frame. It went from about 22.9 down to 22.7 right now. But I've been watching Bitcoin in the after hours or overnight and charting what Bitcoin did and then what the market does the next day. Because I thought I started seeing a correlation where Bitcoin is leading the next day's market. Like if Bitcoin is down in the overnight session, then the markets are down during that next open cash market. So I've been tracking it. I want to get at least a month's data's worth before sharing it with you guys, but there seems to be something there. I just don't know what that there is yet. I need more data really to flush it out. All right. Yep, we can talk about CRM. Let me get through because I know there's people waiting for Intel in the semis because they've been on fire recently. I think they hit their top, and I want to talk about that. Awesome. Thank you very much. Thumbs up right back to you. I greatly appreciate it. You are awesome, and I do. I greatly appreciate you. I greatly appreciate each and every one of you. So thank you very much for doing that. I really appreciate it. Okay, let's go to, I want to start with Intel. All right, this is where the story begins. INTC is the ticker for Intel, and Intel closed today. It hit a high of $30.20. And then it closed, you're going to see it on the bottom right side of your screen here, $30.09, up 1.3% on the day. But in the after hours, guess what? Intel had their earnings report. Intel got crushed. Intel was destroyed on their earnings, just completely and utterly destroyed. They were no good. You know, I talk frequently, not specifically about the semiconductor space at times, but specifically about Intel and Intel going through a transition phase, right? Well, the top highlighted area right here, this is where Intel closed the day at 30.09. The lower blue highlighted area is where Intel is right now, 27.16. That's how far it dropped in the after hours due to its earnings report. Now, it was down as much as 10% in the after hours, and it is pulling other chip stocks and semi stocks like AMD, NVDA, on semi, which is one of my favorite semi stocks. It's pulling them all down the after hours. NVIDIA, let's see. NVIDIA closed right around 198, and NVIDIA is right now at 193. That's a significant drop in NVIDIA in the after hours. Unfortunately, TradingView after 8 p.m. does not show the after hour data. On my brokerage platform, they do. And that's where NVIDIA is right now. It is dumping. if I look at the Qs, right, technology, it closed basically at its high for the day, 293. It's down $2 to 291. If I look at Intel, you can see on the screen, I told you where it closed, 30.09 or 30.09. It's down to 27.16. If I pull up AMD over here, AMD closed right around 75. It's now down to 72. So Intel's horrible earnings is pulling the entire semiconductor space down. If I pull up SMH, which is the Van Erik Semiconductor ETF, it's one of the ETFs that we do our weekly expected moves on. It closed at the high for the day, 241. It's down to 236. And that's the ETF that houses all the big names in the semiconductor space. So Intel and their bad earnings is pulling the whole sector down. And not just semis, but also other technology names. Now, Intel reported Q4 earnings and missed EPS by 10 cents. I don't know if TradingView has the updated data yet. Okay, right there. Missed by 10 cents. On revenue, they also missed. They missed by $449 million. Revenue actually fell 31.6% year over year. And their gross margins declined to 43.8% from 55.8% from a year ago. Now, Intel has been in a transition state, right? The fab facilities, they want to expand and build them. They want to build them in the US, but there's going to be a problem. If Intel's gross margins continue to shrink, because the expectation for Intel was just over $15 billion for the quarter. They came in at $14 billion. Next quarter, they're expected to bring in $15 billion. If they slip even further than the 14, there goes gross profit. And then for the third quarter, analysts expect $16 billion. Where's the money going to come from for Intel? I'll tell you this other one piece. For next quarter, Intel was expected by analysts to bring in $15 billion. Intel only expects between $10 and $11 billion for next quarter. So all of these fab facilities and all this expansion that Intel wants to do, if they don't have the capital, because their revenues continue to decline month, quarter, year over year, how's Intel going to be able to expand? Well, we do know the US government has said, well, we'll give some money to the chip space to build here in America. Well, I'm not a big fan of the government getting involved. You do you, I'll do me, we'll all be happy together. But Intel is going to need that money if it wants to be able to expand and go through this transformation process. Is that the right thing? I mean, AMD, NVDA are both kicking Intel's butt. Maybe they should be able to build fab facilities if they want to. Maybe that's what they should do instead of Intel doing it. Okay. Now, Intel did try to say some nice things about what was happening, right? But you can only say so many good things. Now, despite the economic and market headwinds, Intel said that it continued to make good progress on its, quote, strategic transformation in Q4, including advancing its product roadmap and improving its operational structure and processes to drive efficiencies while delivering at the low end of its guided range. Now, in Q4, Intel took steps to right-size the organization. And I don't know, they're trying to put their investments in the right place where they can make the most impact. But I'm not sure if they're hitting the mark with those. Okay? I'm not sure if Intel is getting the right oh my goodness, if they're not prioritizing the right areas. Now, I don't know. I'm not an insider at Intel. I can only speculate and guess off of what they say. But can Intel deliver on its highest value segments within its company for the long term? I used to think so. Now I'm not so sure. Now, Intel says that these actions underpin Intel's cost reduction targets of $3 billion in 2023 and says that it sets the stage for Intel to achieve an $8 to $10 billion in cuts by the end of 2025. I don't know. Can they do that? I guess it's up to them, and we'll all see. But Intel's poor financial performance is pulling it all down. Look at the Qs. Let me go over here to the Qs right quick. And then I'm going to go to AMD and NVIDIA because I specifically called them out. If you remember during yesterday's live stream, I talked about the chop box that the Qs were in after talking about the rotation from defense into the old FANG stocks. And I said that getting out of this chop box would be bullish. And look what happened today. In the QQQ, this candle for today, this is the daily view, it gapped up out of the chop box. It closed above its 200-day moving average, only by about 50 cents or so. So, and not a big move above, but a move above nonetheless. Now, with the Qs have a lot of work to do to make up with the ground that they lost last year. Over here, right corner, right bottom corner, I'm going to scroll down and show you these numbers here. Performance. Year to date, the Qs are up 9.1%. Over the past year, the Qs are down 16.8%. Now, the Qs were up about 2% today. If you take that 2% and let's round this 1 year, 16.8%. Let's round this up to 17. Add back in the 2% that was created today, and you get to 19%. 1% above a technical bear market. So it is just barely starting to move outside of that bear market territory if we're just using year over year, okay? It's a good sign. Now remember, the darker shaded area with these two rectangles here, which is the dark shaded areas on the right side, that represents 2023. So if you have blinders on and you're only looking at 2023, well, you only see that 9% that the Qs are up. But don't forget about how far underwater the Qs are from the past year. So there's a lot of room to be made up here. I am proud to see and happy to see that it did break out of that chop box, but look to your left of where that candle is. This is today's candle right here, okay? Now go to the left, look at that candle. There's 3 candles right there, 1 more right there. So in the most recent time, this chop box goes all the way back to the middle of September. These 3 times right here that the Qs have gotten outside to the upside of that chop box, either within the same day it fell back to being within it, or it took 2 days and then it fell back down in it. So what's going to make me bullish about the Qs is, yeah, it's outside, right? It's outside of the chop box where these other 3 times occurred. But what's really going to make me bullish is if the Qs pull back. Let's say they pull back tomorrow because of the semiconductor space, or because Tesla had a big run today, so tomorrow maybe the run's not going to be so big. What is going to make me feel more bullish about this market is if it pulls back but doesn't go back into the chop box. That would make me very excited. That's what I'd want to see. And just to point it out also, the weekly expected move on the upper end for the Qs is at 289. 289. And we're at 293 where the Qs closed today. So because of the fact that it pulled outside of the weekly expected move today, it would not surprise me for tomorrow it pull back within that weekly expected move. That would not be a big surprise at all. And if it stayed above the weekly expected move, it would stay out of the chop box. But if it went under the weekly expected move, it would be right back in the chop box. And as a matter of fact, there is a trend line down here. Let me pull it up a little bit higher here. This trend line has been like a channel. It's been like the 2021 channel for the Qs. The 2021 trading channel for the Qs. They've been pretty significantly staying within it. And it's a very aggressive move. Let me open it up just a little bit more. The blue diagonal line and the red diagonal line. Blue for support, red for resistance. And I know the shading behind it makes it harder to see. But going back to the 5th of January, okay, that's where this kind of got started. I mean, we could probably go back to the 1st of January, which would be January the 3rd, the first trading day. But I think that might just slightly be outside of that trading range. So let's call it January 5 to today. It's still, even though it got outside of the chop box, it closed above the 200-day moving average. Both are positive. It is still within that channel, though. So while, yes, I feel like this is a positive step in the right direction to dig ourselves out of this hole, this is expected. What would not be expected is for it to stay above 290 and maybe move sideways for a day or two. Friday, which is tomorrow, maybe even Monday, just to let things cool off a little bit, because the QQQ, its RSI, is at a 70.2. So it's right on the line of being oversold. So there's a couple of things working against the cues for tomorrow right now. So it would not surprise me one bit if the cues pulled back and cooled off for Friday. As a matter of fact, I would expect that. So we'll see how it goes. Amazing, isn't it? Absolutely. I said semis are done. Seeing the pain. Yeah, I think semis have reached their point. I did promise to go look at AMD and NVIDIA. NVDA, let me pull that up real quick. Give me just a quick second. Okay. Look at this. This is literally, this is going at a parabolic rate. And if I box in, let me get the box here. I want to get January. I want to get January in here. So that's January 3rd and go to today. Okay. That yellow box is just this year so far. Answer a question. Ask yourself, what has changed from the end of December to right now, in between that couple of weeks, 3 weeks time? What has changed to cause this? Could it be China reopening? Could it be economic reports not as bad as feared, like the GDP report from today? It's possible. It's possible those are some reasons why. But in my eyes, nothing significant has changed to cause NVIDIA to shoot up like this. Maybe it's all the talk about AI, Chat GPT. And NVIDIA, it's going to be needed for that AI world. Maybe that's what it's about. I don't know. Those things, they seem interesting, but they don't seem like significant catalysts for NVIDIA to shoot up like this. Let me measure. I'm going to measure from the very bottom, which was January the 6th, to the very top hit today, the very top of that wick. That's a 43.7% move in 20 days. That would be 20 trading days. How in the world can you account for that when you ask the question, what has changed in those 20 trading days to cause these types of moves? This is overbought territory for NVIDIA. I don't think it's going to go much higher. I think it's going to pull back tomorrow. I really do. You can't run that fast, that hot on hardly any major catalysts. And earnings for NVIDIA, we're back here, November the 16th. And let's pull up what happened here. They missed by 12.5 cents on EPS. They did get an extra 150 million in revenue, but that was a 17% miss on EPS. Earnings aren't for another 27 days. That's the most significant thing that could occur to move NVIDIA. All right, just something to think about there. Now, let me pull up AMD right quick. And let's see. AMD, it hasn't been as strong, at least I don't think so, as NVIDIA, but it's done its job, right? Now, it was up 1/3% today. Now, we can put that same box just to show you 2023. And I want to catch the bottoms here. So that was January the 3rd, and I want to catch at the top of today. That's January. Now, if I go from the very bottom, there's a really long wick down here. So measuring from there is going to affect this a little bit more than maybe it should. But this is how I measured NVIDIA, wick to wick. All right, 27.4%. So NVIDIA's done over 10% more, or has moved 10% higher than AMD. But AMD has moved 28.7, call it 29% in 2023 alone. Interesting, isn't it, guys and gals? Very interesting. All right, let's see here. What else did I want to mention just real quick off my notes, and we'll get to your get back to your questions and comments here. Just one quick chance. A couple things I want to mention. Tesla was strong. We talked about Tesla already. It was up 11% today. Had good earnings, good outlook for the most part, and it drove continued rebound in the mega cap space that we looked at yesterday. And all it did was push their RSIs even higher into overbought territory. Chevron was a big mover today, up 4.9%. Why? Because it said it was going to do a massive $75 billion stock repurchase program. Now, Chevron's got earnings out tomorrow morning before the market opens. That was a good, productive pre-announcement of the stock repurchase program. Hopefully, it's not hiding something negative in their earnings tomorrow, but that was definitely preemptive to get the stock moving. That was good. Both companies did lead a charge, and a bunch of positive economic data came out today, like advanced Q4 GDP. That was better than expected. Weekly initial jobless claims were better than expected. And December durable goods, they all came in better than expected. And that just added fuel to the fire for today's market rally. But then, like a roller coaster hitting its peak, we hit a bit of turbulence with some selling interest taking place. That happened about mid-morning. Now, selling was driven, I think, by a bit of an awareness of the fact that this morning's data release, in at least some market participants' minds, maybe prevents the Fed from pausing its rate hikes in the near future. I don't know what that means exactly, because I believe the Fed's got 2 more rate hikes in them. February 1st, March 22nd, 25 basis points apiece, taking us to 5%, holding us there through 2023. Maybe December would be the first cut. Plus, tightening continues, $95 billion a month. Now, combine that potential view which I don't know why it's continued to be brought up as headlines, because nothing has changed in the Fed. Nothing. Absolutely nothing. And then I think this is more of the more probable reason. The market's getting ahead of itself with this January rally. As we just saw with NVIDIA, the market's getting ahead of itself, and that's never a really good thing. Just wait till February 1st. Next week, right now, the Fed is in blackout mode, okay? They can't speak publicly. But next week on February the 1st, I'm going backwards in time there. Supposed to be going forward into the future. February 1st, we're going to get a rate hike. And we're going to get a little bit more of insight on what the Fed is thinking. That could wreck this whole January rally. So just wait for February. It could be a little bit more exciting. Now, just when we thought it was over, equities once again proved to be resilient to selling pressure. The market rallied into the close, as I showed you a bit earlier, looking at the S&P 500. It bounced back with a vengeance. All right, mega cap stocks, they definitely pushed higher. The Vanguard Mega Cap Growth ETF, ticker symbol is MGK. It was up 1.7%. Compare that to the 1.1% in the SPY, and mega caps were over or outperforming once again, just like we showed yesterday. And then I think they were a driving force for this comeback. And it was pretty much equal across the board. 10 out of the 11 S&P 500 sectors did end up closing in the green. The only downer for the day, consumer staples, which, like we talked about yesterday, is a defensive sector. The rotation out of defense, out of risk off, going to risk on, back into the fangs. That's where money's been moving to. Now, I also noticed small caps slowed their roll a bit today. I think that short squeeze is over with. That small caps went through for like a whole week. Now, overall, it was a positive day for the markets, and we'll see if this upward trend continues tomorrow. I'm leaning towards no. Okay. Let's see what else you guys have to say. I want to talk about Tractor Supply. They're one of my favorites. I love them. Let's see here. Regarding your trading today, what indicator were you using to track price? How did we get that? Okay. So let me go right to where I was today. SPXL. All right. Now, I wasn't using any sophisticated indicators or trading software. I was using simple price action with trend lines. That's all I was doing. Okay, let's go into this. So this is the direction daily S&P 500. This is a 3x leveraged ETN or ETF. Either way works. Where if the S&P 500 goes up 1%, this will go up by 3%. If the S&P 500 goes down 1%, this will go down by 3%. So it's leveraged, so you got to be careful. But this is one way to scalp trade, do reversal trades, something that you can get in and out of pretty quickly without using zero-date options. So I'm going to go to the 1-minute chart on this because I was using this and I was using the S&P 500 chart. As I showed you earlier, I still had the trend lines on the S&P 500, ticker SPX, which I had, I do not have here because I was using the S&P 500 for my entry and exit points. but this right here is the actual product that I was trading. All right, let's open this up and bring this down so we can see it a bit better. Okay. Now, I don't have them here because I have them on the SPX chart. But starting right here this afternoon, and this is when I was doing it, I was not doing it this morning. We run this line and we line it up right there. It's a little bit different than the SPX. I need to update that to blue. That's support, okay? And then let me get a second one here. And we're going to put it up top. Now, I was not trading this morning. I did not start trading until this afternoon. Okay. So on the S&P 500, ticker SPX, just those three letters. I showed you earlier where I had my trend lines drawn. So this afternoon, once we got this rally, and let me get the highlighter, I was not using indicators for this at all. Maybe a little bit with the RSI in combination, but really it was just these two trend lines, okay? Right here, this is where I noticed, okay, a channel could be forming, because if you start it here and you capture this one, you start it here and then you capture the circle, this was showing me that, okay, a trading channel could be setting up. So I waited until about right here on this candle to actually enter, okay? 1 hour to go before the close. I rode this all the way to 72 cents. I think it closed a little bit under it, which is right about, let's see, it's one of these two candles here. Right about right here, a little bit under that one. Anyway, this group of candles right here, I got out at 72 because it sat there. I got my first major red candle. It pulled back. I got out right there. Okay, all good. Now, I didn't get back in until I saw a second significant pullback right here. So I ended up getting in just above 72 cents right here. And then I wrote it up. I had, this is when I put my trailing stop loss on, and I kept it really tight. Once it tagged up here, it started pulling back. This is when I got stopped out. I got my gain, okay? This is more like scalping than anything else. Now, I waited for it to pull back. It got bunched up right here. I was thinking, oh, maybe this pattern has broken. It's no longer invalid. But then it came down here and got real close to this trend line. Now, on the SPX, it actually broke under that trend line. On the candle back up, which would have been this candle, I got back in, right about 72 cents again. And then I rode that up. The pullback right here stopped me out, okay? And that was it. I was done. That was all the trading I did today. I didn't catch the big run up here at the end of the day. So that's what I did. Those are the lines that I was using, okay? I may have glanced at the RSI, and I like using this CRSI because it shows you the local highs and local lows, all right? It's not just 30 to 70 and 50 in the middle. It shows you in the past how high it's gotten and how low it's gotten, okay? So this band can get narrow, this band can get wide, extended even more. So I like this because I like knowing, especially on very short time frames like the 1 minute here, where is that local high and that local low. If we're up at that local high, that means watch out, or either gonna flush out or we're gonna move sideways in order to get this RSI to cool down some, okay? So that's why I like using the CRSI, because of the local highs and lows. It's wonderful. I really, really like it. But that's it. That's all I was using. I wasn't using MACD. I wasn't using PPO. Nothing. Nothing but 2 trend lines and a leveraged ETF or ETN, however you'd like to look at it. So no magic, none at all. If you want to go over to it, we can. Let me see. Can I get this? There we go. Let's just go over here real quick. SPX. So what I did was I had my laptop, which is sitting right here in front of me. I had my broker on that. So I had my limit orders, my stop losses all set up, ready to go. All I had to do was push a couple buttons, watching the screen, and this is the actual chart that I was using. Although I wasn't trading SPX, I was trading SPXL. All right. So let's bring this up a little bit. This is the actual trend lines that I was using earlier today. So just real simple, nothing fancy, just keeping calm, watching price action, and keeping the stop loss tight. That, I think that's the key thing, okay? Once you set rules for yourself, like, all right, you know, when this thing got around the 72 cent on the actual SPXL, or $72, I should say, stop saying that cents, $72, it was a sticky point, right? It would get there, it would reject. So I would say, okay, in the beginning, $72, when we reach it, my stop loss is triggered, I'm out, no matter how high it continues to go. And then once it pulled back, that's when I would get in. I did the $72 thing a couple of times as my stop loss. And then I set a trailing stop loss because price was moving and making these higher lows. And it was making higher highs for the most part. There was a couple times where it didn't, but it was making higher lows. That's showing me price is wanting to push higher, okay? Until that is broken, that's the rule I was following. It's making higher lows. I'm going to keep pushing this thing, okay? So nothing crazy. You are absolutely welcome. Absolutely. I do have a custom indicator. I use it on the daily chart. It doesn't work for any other time frames except for the daily chart. And it's where I get my zones from. Okay. So when I see that, well, I color code them too on my spreadsheet. And as a matter of fact, can I pull this up? While I'm here, oh, come on. Let's see. Okay. So I color code the zones, and I use red, white, a gray, and a green, gray, white, gray, red. And then there's a dark shade of green and a dark shade of red, a light shade of green and a light shade of red. And the zones on the daily chart, let me go ahead and just remove these. This is what I've been working on, and I share it with our investor community on Patreon. Let me just close this up. I'll put it up there for a moment. All right, come on. We're moving. We're moving. Okay. All right, that's enough. That's enough. Oh, come on, TradingView. Come, I don't know why you're moving when I'm not doing anything. I want to open you up a little bit. I don't want you to close that much. Goodness gracious. Okay. All right, so right here, this is the custom zone. We've got our own math, our own equation behind it on TradingView. And this is where I get the numbers from. So it looks just like Bollinger Bands, but the math is different, all right? The way it's calculated is different. So when, for example, when we're looking at the zones, when, for example, we have a cluster here of days where it's outside of the bottom edge, these would be lighting up red, saying that, whoa, wait a minute, this ETF, this stock, this indice is too far. It's moved too far outside of the zone, meaning it's going to snap back into the zone, okay? And that's exactly what happened. So just real quick, this is what it looks like on my end. And if it's red, that means it's gotten too high or too low, and it's going to reverse. It's going to snap back. So that's what I use the zones for, risk management. That's what the zones are for, risk management. Again, similar to Bollinger Bands, but the math is different on these. Let me pull this up a little bit more. So if you look at right now, if we look at the SPX, which that's what we're on the chart right now, there is a 1.4% probability to the upside to a negative 4.8% to the downside. So if you're looking for your risk reward ratio, you can use this to help you dial that in, okay? So if we're saying that there's only a possibility that tomorrow we could see the S&P 500 move up, that probability is a 1.4% or negative 4.8% that it moves down tomorrow. Okay. I know it can get some kind of confusing at times. If you're really looking for one to watch, XLE, that's the best one. Let's go over there real quick. And this is your energy ETF, your energy sector, XLE. Now, XLE has gotten too high. It is at the top of the zone. So what it's telling me is that for tomorrow, XLE, where are we here? XLE, there we are. There is a 0.6% probability that it's going to move up. There is a negative 6.7% probability it is going to move down tomorrow. So this would be a great exercise. These numbers are not static. They are fluid. They do change as the market changes, okay? Something that could be at the top of the zone, all it's got to do is move sideways for a little bit and it can center itself in the zone, or it can pull back. So what we're saying here, and I'm going to write it on the chart so that way tomorrow we can come back and look at XLE. We're saying, oh, let me bring this down a little bit. I want to write on top of it where there's not a bunch of lines. We've got a white space there. Okay, let's put this up here. All right, so what we're saying, again, is we're looking at a 0.6 to negative 6.7. And I forgot to add my percentage points there. So this would be to the upside, plus sign, and then our second number is negative to the downside. So the probability here favors downside movement. All right, we'll leave that there and then we'll come back tomorrow and we'll see what happened. Okay, now just because there is more downside risk here doesn't mean it can't go up higher. It's just saying that the probability is more on the side of going down than going up. I hope that makes sense. Okay, so we'll see how this all shakes out tomorrow. Cool little exercise to run here on the public live stream for all to see. And we'll come back to XLE tomorrow, see how it played out with that probability. Okay, let's make sure I've got everyone's question here. I know I wanted to talk about Tractor Supply, but we just had so much fun here. I didn't want to miss any of your questions. Oh, I did miss one. Yeah, I did right here. My apologies. Also, what are the chances Jerome does a 50 basis point hike? Has Jerome ever surprised the market with a rate hike higher than expected? I really don't think so. Now, okay, let's go to the Fed Watch tool. We go here often. All right. Just type in CME Fed Watch tool. Fed Watch is all one word. Top choice. That's what you want. This probability is the most accurate to what Jerome Powell is going to do. Okay. When we pull this up and look, February 1st, that's what we're on. Right now, we have a 99. Oh, I got to pull it down so I can see it a little better. 99.1% probability of a 25 basis point rate hike. There is a 0% chance that Jerome Powell will pause in February, on February 1st. There is a 1.9% probability that there will be a 50 basis point rate hike. Now, this has been the most accurate probability for what the next rate hike will be. Okay? All right, let's see here. Let's see. Can we do, does this change it? Okay. All right. What do we have? 23. Okay. It's better to look at the chart. It's not as confusing here. Oh, my apologies. I just caught you. My apologies. Okay, let me get this back again. Okay. Okay, so we got a 99.1% probability according to the CME Fed Watch tool of a 90, I'm sorry, like not a 90, holy moly, 25 basis point rate hike February 1st. If we go to March 22nd, which is when the next rate hike will be, there is an 84.3% probability of a 25 basis point rate hike. Now that would take us to 5%, or technically it would take us to 4.75% to 5%, okay? Because there's always a 0.25% swing between the rate. Just as a little wiggle room. But that gets us to 5%, and then that's when I think the next meeting, which is right here on May 3rd, that's when the Fed will pause. And you can see the highest probability right here, 56.4%, that the Fed does nothing. The Fed pauses and holds the rate at 5%. And I know it's really tough to see, but underneath the bar, that's where you see the actual percent, 475-500. That's saying 4.75% to 5%. That's where the Fed funds rate would be. And then it's going to hold it right there. And let's just run this out. Let's go to the next meeting, which is June. There is a 52.8% probability that we do what? We hold the 5% rate. Let's go and jump. Let's skip 2 meetings and go to November. November 1st. There's a 34 point, is that a 3 or an 8? 34.8% probability that the Fed lowers the rate by a quarter basis point, by 0.25%. Okay? And then let's go look at December to finish 2023. Because November, by the way, was the first time we see the majority say that there's a rate hike. Now, obviously, the further out in time we get, the less accurate the probabilities are. But when we're like the week before the FOMC meeting, this thing is accurate. Now, when we get to December, it's kind of interesting because either one of two things happens. We have a 31.9% probability that the 25 basis point rate reduction or cut that we saw in November, in December, we actually get a 0.25% increase, a 25 basis point increase. That's interesting. Or the November probability, the majority, is wrong. In November, we actually hold the 5%, and then December, we still are holding the 5%. So, many Fed officials have publicly stated through their speeches that they are willing to over-tighten and they are willing to hold the Fed funds rate at a restrictive level throughout the entirety of 2023. So there it is. We're going to hold 5% until the end of 2023. Or also the other probability here is in December, we could cut the rate by 25 basis points. So it's like a 50-50 split here on whether we hold the 5% or we lower it. Okay, let's go back over to February 1st, which is next week. 25 basis point. That is the most accurate that I think I've seen it. Anything that I've seen out there. Now, Tim Burrows, the Wall Street Journal reporter, who is the quote-unquote leaker for the Fed, he's basically said the same thing, right? That the Fed will quote-unquote cut rates, or I'm sorry, not cut rates, will pause the rate hikes this spring, right? Well, February is not springtime. That's winter, right? March, around March 21st, that's when spring arrives. So I get his hint. IDK man, I think, let me put this up real quick. I'll take it down as soon as I read it here. IDK man, I think Jerome is pissed that the market is calling his bluff. That is true. That is true. And putting different rates in his mouth, LOL. I understand what you're saying with that. I absolutely do. Jerome Powell does not want to see the market rallying so hard like what we've seen in 2023. That's not what he wants. He wants the markets to level out, to find some stability, but he does not want to see wild price swings. The higher the market goes, the harder it is for Jerome Powell. Excuse me there. The harder it is for Jerome Powell. So, I mean, we don't have a crystal ball. We'll see how it plays out. All right. With that said, I'm going to wrap up the stream for this evening. Thank you so very much for being with me I love your questions. I love that you guys are communicating with each other. It's wonderful. I'll be back tomorrow after the market has closed to talk about what happened, why it happened, and what to expect going forward. Please do me the favor of clicking that like button, sharing the video with a friend, and of course, if it's your first time watching, or maybe you've watched a couple times, click that subscribe button if you haven't already. And with all that, that should be it for tonight. Tomorrow, real quick, tomorrow morning, there's a couple of things that we need to watch out for tomorrow morning, okay? We get economic data. We get the December personal income. That's out tomorrow morning at 8:30 a.m. We also get the spending report. We also get the PCE price index and the core PCE price index. And then at 10 o'clock, we get pending home sales, and we get the January University of Michigan sentiment. And this is the final report for them, or the final read. And then we got American Express, Chevron, and Colgate Palm Oil. Is that how you say it? I've lost my mind and forgot. Some of the bigger highlights for earnings tomorrow. So want to thank you again, and we'll wrap it up for tonight. And I'll see you back here. We go by between 7:45, 8 o'clock every evening that the market is open. So with that, have a wonderful evening, and I'll see you in the next video.